alaikum, everyone, and good afternoon. Welcome to Abu Dhabi. My name is Lamia Hariz, and I head IR, ESG, Comms, and Marketing for Abu Dhabi Islamic Bank, and I'm happy and pleased to present to you Adib's investment case today. So Adib today is one of the leading banks here in the UAE. We have a market share in retail banking of 15%. Overall, our market share is 5%. We have a very unique market position, given that we do bank around 1.4 million customers, out of which 670,000 UAE nationals. That means more than 50% of the UAE national population, where 70% of them consider Adib as their primary bank. That means a big market share within a very loyal and sticky customer base that have helped us throughout the year in a very low cost of fund and a very low cost of risk as well. A very diversified business model. So in addition to a very strong retail franchise, we do have a well-established wholesale banking, financing Abu Dhabi corporates and UAE corporates, which contributes around 15% of our total revenue, while retail contributes around 55%. But we do have also, other than banking services, like takaful insurance, brokerage, payment, asset management services, which contributing to an increase in our fee income. Today, our non-funded income or non-interest income contributes around 39% to our total revenue. If I compare it to last year, it used to be a 32%. From an Islamic positioning perspective, we are one of the leading Islamic banks in the region. We have an asset base of $61 billion. We have a market cap today of 46 billion dirham. And we do have a very large branch network here in the UAE, 60+ branches across all the UAE and the 7 Emirates. We also have a full-fledged bank in Egypt with 70 branches. It's a bank that caters to all kinds of segments, whether retail or wholesale banking. And we also have presence in countries like UK, KSA, Iraq, and Qatar. We do benefit from a very diversified shareholder base. So we are traded in ADX, and today our main shareholder, which owns 46% of the bank, is a holding company, private holding company called EIIC. And also the rest is floating in the market with 19% foreign ownership, mainly institutional investors. If I want to compare this number today to a few years ago, it used to be around 9%. Also, very strong fundamentals. We do enjoy a ROE of 29%. This is the highest in the market, in the industry, locally, regionally, and even globally. We also enjoy a very strong capital position. Our CET1 today stands at 13.4%, which is above regulatory environment. Regulation wants us to deliver a 9.5%. Also, very strong credit rating from the rating agencies, whether Moody's or Fitch, and we do enjoy a AA rating from MSCI. From a performance perspective, as I mentioned, our ROE today sits at 29%. Historically, if I go back 5 years, we were always a high ROE-driven bank. So our ROE used to always be between 18% to 20%. And going forward, a ROE of above 20%, this is something we are aiming to keep. The drivers of this ROE are a few things. I want to mention our NPM, or in a conventional word, the NIMs, our net interest margin. Today, our net interest margin sits at 4.46%, highest in the market within our peers. And the reason behind a high NIMs, it's because of our CASA ratio. Our current and saving accounts today at the group level are 60%. This includes Egypt, which has contributed to a very low cost of fund. Our cost of fund today at the group level is 2.6. while if I take only Adib UAE without Egypt is around 1.8%. Our CASA retail today sits at 90%. If I see it in 2019, it used to be 92%. What does it mean? It means that we didn't see a migration of our retail customers from CASA or current account to Wakala, or in conventional word, time deposits, even when the rates were going up. From a shareholder's perspective, we have been able to deliver a dividend yield on average above 5%. Our dividend payout ratio have been around the 50%, consistent throughout the years. And we were able to deliver a TCR of 21% with an EPS of 1.132 dirham. Also, our PE ratio is 8.56, and our price to book, we are traded at 2 times multiple. Share price growth, we have seen a growth in share price by 26%. The history of Adib, we're not a very old bank. We were established in 1997 by the Amiri degree by His Highness the late Sheikh Zayed, Allah yarhamu. And then we were listed in Abu Dhabi Stock Exchange market in 2000. In 2007, we have acquired a bank in Egypt where we own today 53% of it. So we have a capital increase in Egypt last year. And in 2012, we have started our international expansion. In 2022, it was the first time where the bank delivered a net profit of $1 billion. I have shared some of the numbers with you, but I wanted to highlight that Adib, in addition to our financial number, we also have non-financial matrix that we look at, including our Emiratization ratio, our women in workforce ratio, our NPS as well, and we do look at these very carefully. From an asset perspective, we are one of the largest Islamic bank in the GCC, 4th largest. And here in the UAE, we are the 6th largest bank. ROE, I've mentioned it, it's highest than the rest of the industry, whether locally, globally, or regionally. So we have an ROE of 29%. From a shareholder's perspective, so our share price have increased. Today, we've reached 13.2. So this is as of September, it was 12.86. A few years ago, we used to trade at 4 dirham. Also, there is a lot of the current valuation from the analyst presents attractive opportunities. So the consensus is around 15 dirham. We are covered by 16 analysts with mostly buy recommendations. Dividend payout story has been consistent. And as you can see here, the ROEs has been growing. And also, we have an ROA of 3.3%. Thank you for your time. I guess the time is done. And I hope also we'll see you in more meetings and with us in our shareholders book. Thank you.